Hello and welcome to another video. In this video, I will cover the very hot stocks, the Tesla. And Tesla is basically today's the number one in terms of market cap. So it beats the Toyota, who in terms of the market cap, and in the auto manufacturing industry, now it's the number one stock. Although we can easily see that the number of car which Toyota produce and the history what Toyota has, or certainly Tesla doesn't have. So that's the power of the stock market, and people believe in it. So in this stocks, I'll really go into deep into the financials to see really it is worth it, and go into its Tesla debt structure, how much debt it has, risk factors, what are the risk Tesla stocks has. So are these. So, and also it's not only the pessimistic, but also go to this financial, quarterly financials, annual financials, and see what's the company is all about. Okay, so from the financial perspective, but before I always start with the company, right? So if you're okay, so before I go deep into the Tesla stock, if you're new to my channel, let me give you my introductions. Myself, Pramod Kumar, as you can see on the screen, I'm a CFA charter holder and FRM certified, and this is my website, riseanalytics.ca. And in my channel, I cover the fundamentals, view of the long-term perspective on the stocks, whether it should be good for our retirement or good from as like a multi-bagger stock or not. So that's what the intention behind it, and certainly not any trading. And this is just my opinions on the stocks, and I analyze and put some fun there. Okay, so that's about it. If you like it, kindly subscribe and like the button. Okay, so let's get started. So before okay, so this is the agenda I have already mentioned. I'll go into the company overview, financial, debt, risk, and the opinions. So let me pull some high level risk profile of the Tesla. Here on the Yahoo Finance, you can see today's the market is closed, and then Tesla stocks, it's all-time high. It's $1,208.66, right? So that's the today's market price, and it's up almost $90, right? And it is $224.42 billion company. And if I go to the Toyota, which is surpasses by Toyota, which is only sitting at $126 per share, less than 10 times of Toyota. But the market cap, look at the market cap, it's only 100. It's not only, but it's 174. So straight Toyota is the winner, right? So sorry, not the winner, but is now the second company in the auto manufacturing. On the earning share, if the is $16 where Toyota is giving, but if I go back to Tesla is giving negative earnings. So basically up to this point, Tesla doesn't have any positive cash flow. So that's why you see the PE ratio is negative. Okay, so that's I don't want to go to the chart. I think mostly people cover that. So let's go back to the deck. Okay, so what is Tesla, right? So Tesla is not just the auto car company, right? It's a combination of two segments. So basically it's auto car, so that's automotives, manufacturing, plus is the energy generation and storage as well. So it provides the houses, the shed on the houses, right? And also on the automation cars, basically these are the electric cars, plus the automation, self-driving. So they are in many segments, right? If I subdivide into this, but at the same time, Tesla claims in their 10K is that it's a world first vertical integrated substantial energy company offering end-to-end clean products. Okay, on my slide, I'm also showing you quickly their core technology, right? So the first one is the autopilot and full self-driving. So that's the main future is, right? And so here I'll read out the few lines. So we enable stop sign and self-driving cars, right? So we know automation and this self-driving, this is the future. So that's a big thing. Then they have a vehicle software. We launched dash cam viewer. Many customers have been requesting the possibility to. Okay, so that's what they mentioned. But and the battery and the powertrain. So that's the one part of the automation, right, on the car side. And on the car side, they have full range from the Model S, X trucks, and now also coming Tesla truck as well, right? So that's a full range from the consumer to for satisfying all kind of consumers. Okay, the next, and their car range is pretty good as well as compared to the non Tesla brand, which they mention, right? So latest one is April 2020. You can see is going almost touches the 400, which is, and if the non-Tesla car range is 130 2 miles gap. That's a very huge gaps. The second bigger segment is the solar roof, right? The traditional roof and the solar roof. And solar roofs looks pretty good as well. So that's on the photo perspective, right? Rather than just showing on the segments. Okay, so that's pretty much the whole business, and the market is big. And okay, let's go to the financials. Okay, so if I go to the operational summary level before I go deep to the financial to see how each segments is doing over the quarterly basis, right? So they, as I now, it's just one step deeper, one step more towards the business. So at right now, what they're delivering in from the car model is the Model S or X production, right? Which you can see from quarterly is it's 9% increase from the last year to this year, right? The Model S and Model 3 or Y production, right? Which is 39% increase. That's a huge jump. And one thing actually I also like about Tesla is they don't do any huge in terms of marketing. Just the Elon Musk just come on YouTube, and then the whole YouTube pretty much pitch Tesla here and there, and that's what in all social media. So it's free kind of advertisement. I hardly see these kind of advertisement with any other brand, honestly, right? In especially if I speak in the car brand. So that's one bonus on the Tesla sides, right? So on the Model X delivery side, right? So it's 1% increase. Okay, so that's okay. So on the solar side, let's go to the solar side. Solar deployment is reduced to 26%, and storage services side, store and services and mobile fleet services is actually increased from 15 to 13 and 37%, right? We can see they have planted or install, you can say, in many supercharged stations or connectors is 29 and 33% year over year growth. And one thing that stands out here is that they claim as well that if you order a car, our finished vehicle inventory level increased to 20 days of supplies at end of Q1, right? So vehicle inventory level is increased to 20 days. Okay, so that's one thing, and they increased the 2,000 stations worldwide. And yeah, and that's another thing, right? So that's a worldwide brand. So it's not like just in North America or Europe. So that's another good point. And it's more like it's brand. People really own it. Okay, so let's go to more now. We see the production capacity. So let's look into next. So now I'm going to the quarterly financials, and then which is the recent. But in this case, Tesla case, I also want to go deep into the yearly financial as well to see if I get some good points, right? So okay, so on the quarterly financial side, and then we'll go to look into some trends as well. So on the quarterly financial sides, it looks pretty good as well, especially on the revenue side. Is you see the automotive revenue increase 38%, right? and the gross profit is increased by 75%. And the margin, the gross profit, not only the gross profit increase, but the gross profit margin is also increased by 538 basis point, which means 5.38 percent, right? On the total revenue side, if I'll convert it to the revenue, it's 32% increase in the revenue by year over year basis, and the 118% gross profit. So maybe that's what the market also like. If I'll stand out from the financial perspective, right? Because usually those growth companies I see, just like yesterday I did Fastly as well, right? That stocks spike as well. So because they don't have a bottom line, right? Or the bottom line is negative, especially you see here in the case of the Tesla as well, right? So it's the income, the net loss, right, is all negative. But the top line measure how many x in terms of the revenue they can generate, or the gross profit is double or not, and that's all that's count. So that's why in this case I think they also highlighted the EBITDA, adjusted EBITDA, which is earning before interest and tax, which grows 500%, over 500% from year to year basis, right? So that's pretty good as well. From the free cash flow is a negative 3%, so it's lower than as compared to last year. And if I see the free cash flow, it was low, but then it's negative in first quarter of 2020. Maybe they don't have much, and it's 188% reduced. So in quarter 4 it was very good, around 1 billion, right? And the cash flow, I think, since they are generating getting the money upfront, because mostly I don't own Tesla, but I saw their online, when I played with their online, yes, you go online and just submit it there, so it seems like they receive the cash upfront. So that's why they have a good pile of cash. So it's like 8 billions from free cash flow, which is 268% increase as per the last year, which is way good. Okay, now this is some chart or matrix to show the graph shows the number of the vehicles delivered. This is in units. So we can see from second quarter of 2017 to the first quarter, this is what latest I can able to get it, 2020. So you can see there is a spike for sure this year. The first quarter 2020, we can see some dip here, but still it's not bad, right? They can still manage to deliver the productions. So production is pretty much increasing, scale is increasing. There is only a dip in first quarter of 2019, but so far we haven't seen any dip. And the operating cash flow is in blue. We have seen in the last page as well, operating cash flow is increased, but in this first quarter is decreased, and the free cash flow is the red is negative as well. The net income is not good. You can see the net income is quite declining. In the third or fourth quarter it was positive little bit, but then the overall sum when we did it, is nothing, right? First quarter is close to very low. Okay, so let's go to the yearly cash flow. Just I'll go high level the trend. So the more is so this is my revenue, and I'll show the trend as well. So the total assets for sure is let's start with the top actually. So this is from 2015 and the latest is 2019. Here the total revenue is consistently increasing. The gross profit is you notice here, right? The gross profit here is still the same. Even the revenue increase here around 4 billion, but the gross profit doesn't increase that much, which is a irony, right? So but the loss from the operation is not that great here, so it's okay, 69 million. Okay, so overall, so this is the assets and all. I think we have seen that enough. So let me show you the some trends as well, which will helpful, easy to digest this information. The price to, because we don't have earning, so that's why I'm unable to calculate the return on equity or price to earning ratio, right? So we don't have that, but that's why I go to the book level. So book is positive, right, and been stable. So when I noticed in 2050 their peak price to book is 30, almost 30, right? But then it comes to 6, and then it consistently over 10 until recently, right, which is 22. So we can see here, so pretty much their average seems like the price to book is 10. So this price to book ratio is honestly is way higher, right? So even if I take 6 or 10, because if I compare that with the other, like a Toyota or Honda is very cheap right now. So maybe I'll try to do a video on Honda as well, and it's a very stable car, very good car, and same thing with the Toyota as well, right? So Toyota is a mass production car, good car. So there it's going as price to books over little over 1 at the moment, but still, right? So but Honda is even below 1. So that's what I find when I was doing the comparison. But still, this one is high in terms of this valuation. Okay, let's go to the next one. Okay, so this one shows the yearly margin. This is the percentage. The blue is the gross profit margin. This is earning before interest and tax, and the net margin. Net margin we know is a negative, so just neglect this one. But overall, the operating margin, the gross profit margin is 16%. It's keep declining as you have seen, right? It was 22 in 0.8 or almost 23, but then it's keep declining. Same thing with the operating margin, but this is just the earning before interest and tax, so it's a little bit increased, but not, it's very fluctuating. So this is the revenue and the net income. For sure, we have seen in the earlier slide the revenue is increasing, but here it shows the net income. The year, when we go to the, instead of quarterly to the whole year, the net income is still negative. And this one shows the very volatile revenue growth, right? It's 27, 73, 68, 83, and then it drops to last year annual to 15%. So making like a M shape. So it's not very consistent. I expect this to be increasing, but yeah, I do find that they I haven't put it, but Elon is Musk, or Tesla is building the more giga factories, right? Some in development, some like Shanghai he's building it, and more in production. So I expect then next or few years, then it should spike up the revenue for sure a lot. Okay, now the cash is the king. Let's go summarize this is of the cash flow. So on the cash flow side, as we have noticed earlier as well, their cash flow is positive. It's 2.04, and it's consistently increasing year by years. This is operating cash, but at the same time they're doing the heavy investment as well, for sure, because it's a pretty new company as well, not that old company, and a lot of infrastructure of these gigafactories consumes upfront cost. So it's a very heavy in terms of the fixed cost. So they are investing as well, right? So the financing side, yeah, they last year seems like they have raised a lot of cash, so that's why it's 1.5 billion or 1 billion, almost 1 billion up as compared to 2018 in terms of the cash. Okay, now from this onward I'll go into their debt structure and the risk factors. So, and I highlight those which is alarming to me, so that's why I have put it here. Otherwise, if it's normal, then I usually won't put it. So this is their total lease obligations, either is the operating lease or their purchase obligation, or even including their debt interest payments, right? So if you see from this year, which is 2020, almost this year is almost going, but they have 8 billions in terms of the debt payments. So operating is not that much, but the purchase obligation which they have bought is 5.7 billion, and just on the interest payment on the debt is 1.7, which is huge. The next year is the interest payment will be increasing, right? 2.5, and the purchase obligation comes half, so 6, and so on. So it's not that less. So which makes me curious why they have so much interest payments on their debt. Like 2.5 billion is not easy or low amount of money, given when the company is not generating enough or having the negative cash flow, right? And the bottom line is negative, given that. So then I pull out their the Tesla debt structure. This is as per their 31st of December 2019, and it's in million. So if you can see, there are a lot of debts it's been issued. So this is due in 2021, next year, and these debts are due soon as well, right? So 1.3 billion, almost 1 billion, 2 billion, close to 2, and so on. So if I this is recourse debt and non-recourse debt. Some are on like asset-backed securities. I don't want to go into the detail, but the maturity is coming soon. If the total is 12 billions, the total amount of debt, right, which they have in their balance sheet. Now some people can think, okay, their share price is too high, maybe they can sell some of their shares and pay off this debt, right? So yeah, that I'm not sure, right, what's the clause, either they can do that or not. I haven't seen that, but mostly people, the companies pay by doing the raising the money itself organically, right? So anyway, but that's the main problem is they have a debt, right? And it's a lot of debt. But if they start doing it and diluting it, then I'm not sure, maybe then the share price can crash, right? Because now the company is starting to sell to pay off its debt. So that's a very negative point I'll see. And in the past, I think yeah, they have some, I'm not sure, I've seen in the news as well, right? So they have some problems with their debts as well. Okay, so let's go to the next. Okay, now I'll go, this is for my points. I'll show you their 21. Okay, so now I'm going to the risk factors, some of the risk factor which is highlighted from their state 10Ks, and I'll like to read it to you. Okay, so the first one is, they say we have experienced in the past and may experience in future the delay or other complication in the design, manufacturing, launch, and production ramp in our vehicle, energy products. So this is what has happened in the past, right? So they have their delay. So, and then once they have delay, their share price, it affects the share price and bottom line, right? Especially since this has a lot of volatility in terms of share price, and given that the company is building like new trucks, new gigafactories, and they have just a prototype shown on the YouTube, right, that this is what, and then people start deploying it. And due to the coronavirus and other factors, if those factories development get late and anything scheduled, for sure it will affect the stock price. The next thing is, which I like to show here, is there are some other point, but I think I'll only focus on the other important. This is another very big red flag for me. So Tesla is a complex product, right, in terms of the solar, the battery automation cars, and they have very specialized suppliers. That's what they mentioned. The majority of, we are dependent, look at the word dependent, on our supplier, the majority of which are single source suppliers. So this is a very big red flag. Inability of this supplier to deliver necessary component of production according to the schedule at price, quality, volume acceptables, and inability of efficient managed products could harm a material adverse effect on our financial conditions and operations. So they are claiming as well, right? So this is not a general product, so they can come and fit it up. So it's a specialized product. And one place I think I have also read, if Japan has a problem and they're unable to deliver, then they had a issue in the past as well. So let me go to the other one, right? So this is the one. Another one is the increase in cost. So this is the very lithium based iron cell could harm the business. Again, these lithiums is not that easy. If there is a short supply, their car runs on the battery, right? If their battery has short supply or any other component fails, then the problem occurs. And also the problems seems like if the yen, US, the currency as well, right? The fluctuation of any foreign in which the battery cells or raw materials are purchased. And here they specially mention the Japanese currency as well. So if there is a problem, then it affects the bottom line and all. So this is another red flag I like to give. And the last but not the least, but very important factor which I like to conclude here is this. Elon Musk himself is the biggest risk factors. Why? Let me tell you. So they claim we are highly dependent on the services of Elon Musk, our CEO, and the largest stakeholder. He's the largest stakeholder. Although Mr. Musk spends significant time with Tesla and is highly active in the management, he does not devote his full time, does not devote his full-time attention to Tesla. Mr. Musk currently serves as a CEO of the two, is a SpaceX technology and a developer manufacturer of SpaceX launches. So this is another good venture, right? Why not he has another person to run this company? This is a top auto manufacturing companies. He can still overview it, but still is a risk. What, right? So this is a single point of risk. Most of the people I think today is investing in this stock because of Elon Musk as well. And if he's not all investing in his company, then spending the full time and diverging his time, that's not a very good sign as well. Maybe it can be bad to his health as well, right? As think from that perspective. Okay, so now we have seen all the facts for sure, and now is the time to before I say thank you, to form the opinion. So my perspective, for sure, this is the new revolutions, the gigafactories, solar energies, automation, driving. So this is the future. At moment, I see some other company as well, like Nikola, Neo, and some other brand, but they are not in the same production categories. Some other companies which is existing like Toyota, Chevrolet, and maybe BMW, they have their electric cars, but they are not in that stage or can be compete. So that's only, and even if they compete and they come, and when the future more cars or the more electronic companies will come, for sure it will take the auto shares from the Tesla market. But the other business segment which is non-auto or the automation, still that's the question mark, right? So Tesla, I believe, is a way ahead on that game. But given that the company is still having the negative revenue, and the share price is still skyrocket high. Although I like this share, and honestly I don't have any I don't hold any of the share of the Tesla. It's not a right point. If somebody own it and make money, that's good. I think they should cash in right now. It's the right time, because for sure when the other company comes up, then one, and second thing, for sure, not for sure, but maybe there is a big amount of possibility maybe because of coronavirus or supplier issues or the new gigafactory delays. If little bit drop on the ocean, the waves for sure, not the ocean, on the silent sea, right? There will be waves, and the stock will crash. But at the same time, seems like it's going on the momentum sentiments, but you never know when it can come down. But if it's if certain factor on the risk side which I mentioned, if any of the factors in addition to the coronavirus, right? Little bit we pay a stress on that, then the stock will suffer. But honestly, on the long term perspective, if I come or not, if I say think from that perspective, this is a pretty good stock to hold on if the price comes lower, for sure. This right, but not at this valuation. This valuation is crazy. Okay, so that's what my view on this stocks. Honestly, if you like it, kindly do subscribe and like this video, and give the thumbs up if you are existing or the new YouTuber on my channel. So it this way Google will know that this video is good, and more it will promote. And if you want me to cover any other stock on my channel, please give a thumbs up and comment on my video, and I will look into it. And I also post one link on the story channel. I like it, and there's one young kid who is reading the story. If you have young kids in your home as well, make sure he or she can listen to those stories as well. Okay, so subscribe to that channel as well. Thanks you for watching, and see you soon on the next video. Bye for now.